Hello traders, you're welcome back to the Forex Geek channel. In this video, we are going to be diving into the best Heiken Ashi and Stochastic day trading strategy. All right, this is perfect for beginners who want to simplify their trading while increasing their chances of success. This strategy combines two highly effective indicators, which are the Heiken Ashi candles and the Stochastic Oscillator. So I'm just going to be adding both indicators to the chart right now. The Heiken Ashi and the Stochastic. All right. Okay. Now, let us start with the Heiken Ashi. Unlike traditional candlesticks, Heiken Ashi uses a modified formula that smooths out the price action. This gives you a clearer view of the overall trend and helps filter out noise. It makes it easier to identify whether the market is in an uptrend, a downtrend, or if it is consolidating. Okay? Basically, a green Heiken Ashi candle typically indicates bullish momentum. All right? While a red candle indicates bearish momentum. By using Heiken Ashi, you can spot trend reversals much more effectively than with regular candlesticks, making it a key part of our strategy. Now, what is the Stochastic Oscillator? This indicator helps identify overbought and oversold conditions in the market, providing you with ideal entry and exit points. As you can see, this indicator oscillates between 0 and 100, with values above 80 indicating overbought conditions and values below 20 indicating oversold conditions. By combining the Heiken Ashi with the Stochastic Oscillator, you get a powerful tool for spotting market entries. When the Heiken Ashi candles are green, and the Stochastic is below 20, this is a good example. When the candles are green and the Stochastic is below 20, it's a strong signal to enter a buy trade. On the other hand, when the Heiken Ashi candles are red and the Stochastic is above 80, that's an opportunity to enter a sell trade. All right. Now let's just walk through setting up these two indicators on TradingView. As you can see, the way I added the indicator, you just come to the indicators search bar, you search for your Heiken Ashi, click on the indicator, let it be added to the chart. All right. Then you can just just to drag this to close up the traditional candlesticks, because we're going to be focusing on just these two. And then you go back to your indicator search bar, you search for the Stochastic Oscillator, you add it to your chart. Now you have both indicators on your chart, right? So now that we have both indicators set up, let's talk about how to use them together to trade. Okay, for your buy signal, the Heiken Ashi candle should be green. It's a must. Okay, indicating an uptrend. Then the Stochastic Oscillator should be below 20, indicating that the market is oversold and ready for a potential upward movement. So this combination gives you the green light to enter a buy trade. All right. So having that, we can look for a good opportunity to enter a buy. Stop loss below the recent swing low. Take profits can be around the key resistance zone. So maybe when the when the Stochastic enters the overbought territory and then cross downward, it can be a time to exit your buy trade. Now for a sell signal, just ensure that the Heiken Ashi candles are red. Yes, they must be red. And your Stochastic Oscillator must be above the 80 level, showing that the market is overbought and due for a potential reversal. So when both of these conditions align, it's a strong signal to sell. So in that case, it would have been a good place to enter a sell trade Stop loss can be right above the swing high, previous swing high. Your take profits can be around key support zones. All right. Now the best Heiken Ashi and Stochastic day trading strategy works well on shorter time frames like the 5 minute or the 15-minute charts. That is for day trading. Okay. However, feel free to experiment on different time frames to see what works best for you. Because at the end of the day, you are the one trading, right? So you have to figure out what works best for you, okay, according to your own unique trading style. All right. One important tip is to always combine this strategy with solid risk management. Okay, do not trade with an amount that you cannot afford to lose. Do not risk more than 1 to 2% of your account balance in a single trade. All right, and ensure that you always make use of good risk to reward ratios. Make sure to use stop losses to protect your trades. When you get a sell confirmation and you enter a sell trade, make sure that you always use a stop loss, please, and make sure that you have a good risk to reward ratio. For example, ratio 1 to 2, meaning that if you are risking 10 pips, you're potentially targeting at least 20 pips, and so on. All right. Make sure to use stop losses to protect your trades and only trade during periods of high market volatility to get the most out of these signals. Now, the best Heiken Ashi and Stochastic day trading strategy is a great tool for beginners who want to simplify their trading while still capturing significant market moves. All right, by understanding how both indicators work and using them in tandem, you'll have a strong foundation for making better trading decisions. But remember that emotions also have a role to play. Okay, you need to manage your emotions effectively if you want to be a successful trader. You need to learn how to avoid greed, how to avoid fear. You need to learn how to be patient. You need to learn how to trade what the market is saying. Okay, do not hope for the market to go down when it is in an uptrend. All right, do not trade based on hope. You should trade what the market is saying. If the market says that it is in an uptrend, trade in the direction of the trend to be on the safer side. All right, it is very important. Okay, so if you found this video helpful, please don't forget to like the video and subscribe to the channel to stay updated on more trading strategies and tips. Happy trading, and I look forward to seeing you in the next video.